Welcome back to Smart Stock Sam, the channel where we cut through the noise and find the real data hiding underneath Wall Street's surface. I am Sam, and if you have been watching this channel for any amount of time, you know we do not chase headlines here. We follow the numbers. And right now, one specific set of numbers is screaming so loudly I could not wait another day to get this in front of you. Today, we are diving deep into one of the most controversial, most polarizing, most explosive setups I have seen recently. And before we get into the full breakdown, I want you to understand what this video is actually about. There is a hidden catalyst sitting right underneath this stock that could either break it completely or launch it into a violent, short-lived explosion to the upside. We are talking about a company called BitMine Immersion Technologies, ticker symbol BMNR, a stock that has collapsed by 89% from its 52-week high, yet holds an absolutely staggering amount of crypto assets on its balance sheet. We are going to walk through the full picture, the massive digital asset treasury, the terrifying structural flaw buried inside their finances, the 4 perfect storm catalysts that triggered this collapse, what the dark pools and options chains are whispering right now, and finally, a very specific data-backed trade setup for the week of June 8th through the 12th. If you are ready to go where most financial channels are simply too afraid to go, hit that like button right now. Make sure you are subscribed so you never miss a breakdown like this, and let's get into it. So let us start with the war chest. BMNR is currently holding 5.4 million Ethereum tokens. That is 4.49% of the entire circulating supply of ETH on the planet. Alongside that, they hold 203 Bitcoin and $446 million in hard cash. On paper, this looks like an impenetrable fortress of digital wealth, and yet the equity has been absolutely obliterated. The stock fell from a 52-week high of $161 all the way down to a recent close of just $15.90. That is an 89% drawdown. The reason the market is punishing them this badly is not because the assets do not exist. The assets are real. It is because there are an estimated $8.9 billion to $9.2 billion in unrealized losses sitting on that exact digital asset treasury. They are essentially holding a melting ice cube. The assets are shrinking in fiat value faster than the business generates income to compensate, and the market is not looking at the size of the treasury. It is looking at the speed of the bleeding, from that $161 peak down to $15.90. The velocity of this drawdown has been breathtaking. We are looking at a 28% negative move over just the last month alone. This is not a correction. This is a multi-layered institutional flush pushing BMNR into historically oversold territory. Stocks do not crash this far this fast in a vacuum. There are always specific catalysts, and in this case, there are exactly 4 of them converging into what I can only describe as a perfect storm. Catalyst number 1, the Ethereum breakdown. ETH recently plummeted below $1,570 following a devastating 15 consecutive days of spot ETF outflows totaling $2.4 billion in May alone. When the underlying asset of your entire treasury is in freefall, your stock goes down with it. Catalyst number 2, severe economic tightening. With 172,000 United States jobs added and inflation staying sticky, the algorithms immediately flushed every risk asset on the board because hopes for Federal Reserve rate cuts evaporated practically overnight. Catalyst number 3, and this one is absolutely critical, the strategy shockwave. Strategy, formerly known as MicroStrategy, sold 32 Bitcoin to pay for a massive 11.5% dividend to their preferred stockholders. Think about what that did to market psychology. It permanently shattered the illusion, the unspoken promise, that these crypto treasury companies will never, ever sell their holdings. The moment Strategy broke that promise, every similar company in the space got repriced lower. And that leads directly into catalyst number 4, BMNR's own self-inflicted wound. The company completed an upsized $280 million preferred stock offering at a yield of 9.50%. Investors are now terrified that BMNR will be forced to sell its ETH, just like Strategy sold its Bitcoin, simply to cover those heavy dividend payments. That fear is pricing real money out of this stock every single day. Now, despite all of that, BMNR is not some fly-by-night penny stock operation. Their holdings include strategic equity stakes, $180 million in Beast Industries, a $30.5 million acquisition of Peer 2 infrastructure, and $93 million in 8Co holdings. And look at who is backing them. Premier institutional capital from ARK Invest, Founders Fund, Pantera Capital, Kraken, and legendary value investor Bill Miller III. But here is a red flag you cannot ignore. Insider ownership sits at a virtually non-existent 0.2%. The founders and executives have barely any skin in the common stock. Retail and institutional investors are carrying almost all of the structural equity risk alone. Now let us get to the most dangerous metric on their balance sheet. The thing I am calling the fundamental trap, and I want you to pay very close attention here because this is the single most important concept in this entire video. BMNR generates income through native Ethereum staking yields that hover variably between 2.73% and 5.00%. Sounds reasonable at first glance, right? But here is the critical detail that most commentators miss entirely: that yield is crypto-denominated. Its fiat value fluctuates wildly every single day with the price of Ethereum. On the other side of the equation, their Series A preferred stock mandates a rigid 9.50% dividend, creating a fixed $28.5 million annual liability that is denominated in dollars. It does not move. Do you see the mismatch? When Ethereum trades above $2,000, their staking yield in fiat terms can mathematically cover that dividend. But the moment ETH crashes below 1,600, which it already has, the fiat value of those staking rewards completely fails to cover the obligation without taking on more debt, diluting shareholders further, or liquidating the core Ethereum position itself. It is a toxic duration and currency mismatch, and it is the central reason the market keeps selling this stock relentlessly, even at these historically depressed levels. And yet, and here's where it gets genuinely interesting, Wall Street analysts are looking at a completely different timeline. The average analyst consensus price target on BMNR sits at $34.50, implying an explosive 116.50% upside from current levels. The consensus score is 2.80, heavily skewed by two strong buy ratings. Why are they so bullish? It comes down to a structural thesis championed by analysts like Jeffrey Kendrick at Standard Chartered. Kendrick argues that BMNR is a structural beneficiary over companies like Strategy because Ethereum's native staking yields give it a long-term operational advantage that Bitcoin Treasury companies simply cannot match. Bitcoin yields nothing. Ethereum yields a compounding income stream. Wall Street's bet is straightforward. If Ethereum recovers, that yield engine roars back to life, and the fundamental trap flips into a fundamental advantage. Long-term bullish thesis. I understand it completely, but right now, in June, the technicals are telling a very different story. BMNR has a confirmed death cross on the daily chart. The current price of $15.90 is trading violently below its 20-day, 50-day, and 200-day moving averages. The 200-day is all the way up at $20.18. Ethereum's own moving averages are also shattered, sitting below $1,700. However, and this is the setup, the 14-day RSI is sitting at a deeply suppressed 34.86. The stochastic oscillator is reading 18.14. Both are screaming extreme oversold conditions. The MACD is negative, and the average true range sits at 0.52, confirming incredibly high intraday volatility. When technicals get stretched this far to the downside, like a rubber band pulled to its absolute limit, a violent snapback becomes almost mathematically inevitable. The question is, what triggers it? Let us follow the money because the dark pools and options chains are painting an extraordinarily specific picture. Public short interest appears tame on the surface at 4.69% of the float, but the dark pool short volume, off-exchange institutional trading most retail investors never see, recently spiked to a massive 40.01%. Institutions are actively suppressing this stock, and yet, in the options market, there was highly unusual volume with over 140,000 contracts traded, and a striking 62.59% of those were calls, bets the price goes higher. Why would that many upside bets be placed when institutions are selling in the dark pools? Because those heavy downside protection positions, specifically the June 5th $21 puts, representing over 9,200 contracts, have officially expired. That wall of derivative downside pressure has been lifted, and Ethereum's max pain price is sitting higher at $1,650. The derivatives market is flashing a clear warning to short sellers right now. Before we get to the exact trade, you need to understand three metrics that completely override traditional financial analysis on a name like this. First, forget price-to-earnings ratios entirely. They are useless here. BMNR's price-to-sales multiple is over 600. Instead, watch the staking yield versus dividend obligation, that 2.73% ETH yield measured against the fixed $28.5 million liability tells you the true liquidation risk in real time. Second, watch the market value to net asset value ratio, or MNAV. BMNR's growth model depends on trading at a premium to its assets so it can issue shares and buy more crypto. Right now, that premium is completely compressed below 1.0 times. The growth flywheel has stalled. Third, and most critically, watch the upcoming passive flows. On June 26th, BMNR is scheduled for inclusion in the Russell 1000 index. That inclusion triggers massive, mandatory, blind institutional accumulation. Passive funds do not have a choice. They must buy. And the market always front-runs these events. That brings us to the convergence point. Three massive catalysts stacking on top of each other to create what I am calling a reflexive relief rally window. The expiration of those June 5th in-the-money puts has removed a wall of derivative downside pressure. The June 10th settlement of the $280 million preferred stock offering eliminates the overhanging fear of further immediate capital raises. And the market is now front-running the mandated June 26th Russell 1000 inclusion, building a structural bid beneath the stock. When these three forces converge, they place enormous pressure on that 40% dark pool short volume, creating a scenario where shorts are forced to start covering, and covering drives price higher in a powerful feedback loop. Here is the exact trade for the window of June 8th through the 12th. The direction is a speculative long swing trade, and I want to put extra emphasis on the word speculative, because this is absolutely not a set-it-and-forget-it position. This is an active, high-conviction, short-duration trade that demands your full attention and your discipline. The ideal entry zone sits between $15.50 and $15.80, perfectly aligning with classic support levels at $15.58 and $15.41. Your hard stop loss must be placed at $14.90. No negotiation on that number under any circumstances. If the rally triggers, your first take-profit target is $17.30, and your second extended target is $17.96. The core edge is that BMNR is a high beta asset. If Ethereum even slightly drifts upward toward its $1,650 max pain level, BMNR will amplify that move exponentially through a combination of short covering and passive buying momentum feeding on itself. The price ladder makes the asymmetry clear. Your entry zone offers a direct discount to the estimated $17.31 book value. Target 1 is mean reversion to that book value resistance. Target 2 correlates with the 50-day moving average overhead. Your risk from entry to stop is tight. Your reward to target 1 is meaningful, but hear me clearly. A daily close below $14.90 is catastrophic for this thesis. A close below $15 flat signals total structural breakdown, heavily implying Ethereum is cascading into the $1,400 to $1,500 liquidation zones. If that happens, exit the trade immediately with no hesitation. Let me draw the hard line between two types of market participants. For long-term allocators, the status is a severe reflexivity crisis. Your action is to wait. Do not hold this stock long-term until Ethereum decisively reclaims $2,000 as macro resistance, because until that happens, their preferred dividend coverage cannot be mathematically proven without liquidating core assets. However, for tactical traders seeking high asymmetry in a short window, the status is data-backed exhaustion. Your action is to execute. You are stepping in on a deeply oversold stock sitting at an 89% discount with an RSI in the mid-30s. Right as mandated, Russell 1000 index buying is forced to step in beneath the price. Before I give you the final conclusion, here is something I need to read clearly. Nothing in this video constitutes financial advice. Everything you have heard is for educational and informational purposes only. BMNR is an extremely high-risk speculative asset. You could lose your entire position. Past price levels are not guarantees of future performance. Always do your own due diligence. Consult a licensed financial advisor before making any investment decisions, and never trade with money you cannot afford to lose. Smart Stock. Sam is not responsible for any trading decisions you make based on this content. The final bottom line, BitMine Immersion Technologies is facing a severe fundamental duration mismatch, making it an exceptionally high-risk, long-term hold at current crypto prices. However, the extreme technical exhaustion converging with June derivatives expiration and the upcoming Russell 1000 mandatory inclusion creates a highly asymmetric, data-backed long setup for the week of June 8th through the 12th. This is a tactical trade, not a long-term marriage. A break below $15 flat completely invalidates the entire thesis due to cascading liquidation risk in the underlying Ethereum assets. Trade smart, respect your stops, and let the data guide your allocations. Not the hype, not the fear, and not the headlines. Now I want to hear directly from you. Here is my question for the comments. Do you believe the Russell 1000 inclusion on June 26th is already priced into this stock, or do you think the market has not even begun to truly front-run that mandatory institutional accumulation? Drop your answer below. I read every single comment. If this breakdown gave you value today, hit the like button right now. It genuinely helps this channel reach more serious investors and traders just like you. And if you are not yet subscribed, we put out data-driven analysis like this every week, so do not miss the next one. If this video brought real value to your trading week, consider sending a super thanks through YouTube's support feature. Every contribution goes directly back into the research, the tools, and the time it takes to produce content at this level. And finally, I have just launched the Smart Stock Sam membership, an exclusive community where we go deeper than the public videos and genuinely level up together as investors and traders. The link to join is right below this video. Come be part of something serious. Until next time, trade smart, stay disciplined, and I will see you in the next update.